So moving forward, first half could be well challenged by rising inflationary pressure. So it's a low base. Second, you still have transitory pressures coming from the fourth quarter, which is the impact on meat prices, on ASF, the typhoons which affected vegetable and crops. No? So that should at least put inflation on the high side in the first half. So I'm looking at close to 4% inflation for 2021.
Hi everyone, welcome back to our New Year's edition. This time we're gonna have an outlook on the markets and the economy, and we have Jonas Ravelas of BDO and June Neri of BPI joining us back in the podcast. Before I begin with the serious questions, how are you, gentlemen? How's everything? How's the new year for both of you?
Well, I'm good. Happy New Year, everyone. I guess it's a bit better. Well, it's much colder compared to last year. Hopefully, so far so good. The first 11 days are a bit better compared to last year. Hopefully, knock on wood.
How are you, June?
Yeah, same as last year. Always happy to serve our clients and our friends whenever they need our opinion about things.
You guys are people I respect for your opinion, and whatever you say, I believe has weight. Very, very quick icebreaker. When markets dropped last March, we went into a lockdown. What was the first thing that came into your head? Or what were the first action steps that you were also thinking that could possibly happen? We'll probably go with June first and Jonas.
Oh yeah, of course, if you're talking about the stock market, I was very worried. But as always, I never do a knee-jerk trade. I'm always here for the long haul. So just held on to them, however big the drop in my value, my my asset value was during that time. So just held on. Of course, got spooked. And again, as I mentioned earlier, before your recording, I was so worried about being near Taal. No, that was my main concern. So the stock market was secondary to me for a while.
Got it. Jonas?
Yeah, well, for me, it was more of thinking of buy the dip and eventually think about if it fell below, if it continued. No, so that was eventually the challenge. So I guess that was my thinking.
I want to start out with this question. We are now 10 months into the lockdown. Cases are rising. Tapos the vaccine is out. Based on all of this that were unknown no March, no, how do you see this playing out for the Philippines? Is the worst over from an economic standpoint?
Well, I guess when we look at where the Philippines is today, coming from the lockdown, assuming we don't go a hard lockdown, I think the worst is behind us. I think there are three success factors that I'm currently looking at. First is effective pandemic management is one. So basically, this is a preparation for the vaccine rollout. At the same time, living with the virus. In the meantime, that based on the timelines, the earliest will most likely be fourth quarter of 2021 that we get to see the rollout of the vaccination. So that should at least translate to your potential recovery path. So the second is government spending. So government spending, so this is more of fiscal. If 2020 was more about monetary policy, this is all about now fiscal spending. So fiscal spending in the sense that government will have to really spend on infrastructure, second, health, and eventually education. So that is actually what we want to be able to do. Number three is eventually building confidence. So confidence in the sense that consumers like you and me, and eventually the business in public will be able to sort of have the confidence to expand business and continue spending. So those are the three success factors that could really do well for the Philippines in 2021. So that translates to at least a 6.6% on my base case growth for the Philippines. At best is 6.9.
Yeah, well, Marvin, of course, we all have to respect the science part. No? If the infection rates surge uncontrollably and it overwhelms our healthcare system again, then we will have to dance backwards, step backwards. Dancing with the virus, diba? We try to move forward when the science is good, but we have to respect if the virus is starting to spread again, even with the vaccine. But for now, we're assuming our base case doesn't assume that. We're assuming that we will be able to manage the infection rates, and people are actually psychologically more confident to go out now because of two things. One is they learned over the Christmas season that okay naman pala, as long as you follow the protocols, you'll have the confidence to go out for groceries, for the usual celebrations. We saw the numbers from Google improve substantially during November, December period. To levels, no? I don't know if you've noticed, Marvin, in December, the mobility in groceries and pharmacies exceeded pre-pandemic levels. So that's quite encouraging. And if by, say, February, March, we see the numbers for the infections improve remarkably, then we will probably see a continuation of people having confidence going out. More so if there is anticipation that vaccines will come in. So we're very hopeful that we will gradually adjust and again dance with the virus. Hopefully, more steps forward than backwards, Martin.
And I think parang we've learned to live with it kasi on the first 3 to 4 months of this, kahit ako I was scared to go out but something shifted in November that parang okay naman, I can live with this, I can go out kasi before I was even scared to get deliveries outside. Naka-gloves pa ako, naka-hood pa ako so that to be protected, but later on parang
kasi during the first 3 months I think the virus was very aggressive and we didn't really know how to handle it yet. We didn't know the necessary protocols to avoid it. That's why a lot of people passed away resulting from it. But by the second quarter or the third quarter of last year, parang we had the sense that it's being managed better. The capacity of hospitals have improved, hindi na full capacity. We had to, however, pull back slowly in August, but after that, parang tuloy-tuloy naman na yung confidence ng both the healthcare workers and the general public to go out. Kaya lang ang naging problema rin, Marvin, why we got left behind in the ASEAN was yung public transport. Even if we already said we're allowing 60%, the available public transport was less than 40%. So people were forced to use bicycles, and those who cannot ride that long for their work. For example, if you come from Pampanga and you're a construction worker in Manila, there was no way for you to get here using public transport. So that held the economy back in the third quarter. Kaya double-digit decline pa rin tayo. But hopefully, removing those and now maybe going closer to 60-70% of total public transport, we're seeing decent recovery in the second to the fourth quarters of 2020.
I'm so curious on this. When we already saw, or at least the BSP saw that the economy was a bit in trouble at a certain point last year, one of the ways that they tried to protect the economy was to lower rates, and we've dropped rates very, very fast for last year. And it's quite low already as compared to where we were in 2018 or 2019. My question is this: given that we're not yet near zero naman, do you think the BSP will continue to lower rates for the year, or you think it will be close to where it is at the start of 2020 still?
Yeah, Actually, BSP was very proactive, Marvin, even at the outset. Pagdating ng announcement of the lockdowns, they already provided a lot of initiatives, no? Lowering the reserve requirement, exempting SMEs, no? Ang daming series of, and then they eased on the restrictions to financial institutions. And then, of course, the lowering of the policy rate. In fact, by June, parang nasa 2.5 na tayo sa policy rate. No? Laki na ng binagsak, already more than 100 basis points through the middle of 2020. No? In fact, at one time, 50 basis points yung kinakat nila. No? So that by around November, nasa 2.25 na tayo. Nag-cut pa sila ng isa, no? 2%. Dito kami medyo kinabahan kasi problem with cutting too much is if you need to take it back later on because inflation is picking up, hindi naman alarming inflation, but at least try to align the policy rate to avoid rapid inflation. Baka maging volatile yung market. That was our concern last November. So, and true enough, when the typhoon took place, we had a spike, no, from vegetable prices coming off Cagayan Valley's floods, no? And that people are saying it's transitory. Di bale, ano rin yan, people in the market were hoping sandali lang to kasi pag ayos na, may gulay na ulit, prices will go down and BSP can continue cutting rates. Well, it's true that it's partly transitory kasi vegetable prices can go down if the people there plant again. No? The problem is there are two other elements, Marvin. One is ASF, yung swine flu, which cannot be solved immediately. It's a long-term issue in the agricultural sector, and that will keep meat prices elevated for some time. So it's not transitory in that sense. The other is oil prices, Marvin. Remember, it's $52 now, and back in April 2020, nasa ba yan? $10, no? Or $9, no? Ganun lang, nag-negative pa nga at one point. Now, if you fast forward to April 2021 and compare, say, $55 by then, no? 52 kasi ngayon, trending towards maybe 55, 63 daw by year-end. If you do a comparison year over year of petroleum prices, do you know that it will increase by 180%?
Oh.
So that will really have a knock-on impact on inflation. Kahit temporarily, it's very difficult to justify a rate cut in that kind of an environment. Inflation is spiking. No? So this is why BSP announced, Governor Diokno specifically announced last week that they will probably be on hold for the entire first semester. But 2% policy rate is still very friendly for the market, Marvin. It's not something that will take away the money from the table. No? It's enough to support the equity market. However, siguro later na lang, no? It will be subject to volatility.
Well, I guess the central bank rates will remain more of accommodative, but I don't see any cut in policy rate. I think we'll probably stay at 2%. There seems to be proven pressures. So one, it's coming from low base. Last year we averaged 2.6%. So remember the first half to the second quarter, we saw inflation quite low. No, remember oil prices went to as low as $30 per barrel. We ended the year at $50 per barrel. So now it's doing 53. No? So moving forward, first half could be well challenged by rising inflationary pressure. So it's a low base. Second, you still have transitory pressures coming from the fourth quarter, which is the impact on meat prices, on ASF, the typhoons which affected vegetable and crops. No? So that should at least put inflation on the high side in the first half. So I'm looking at close to 4% inflation for 2021.
And what's interesting about that is we've seen a lot of companies borrow because the rates are very, very low. They took advantage of it. Daming bond offerings over the past 6 months also. And I think lowering the rates somehow benefits the stock market because there's nowhere to go to get the yields that you would get.
ang hindi nila makita na effect is a recovery in loan growth kasi loan growth is now almost zero year on year. No? So what it says is maybe there's a limit to how much rate cuts can help the economy. And baka naman mayroong mga ibang tools that will help us better. Ang sinasabi lang namin is parang nagasgas eh. The tool was a little bit slightly overused. Hindi naman super overused. More so if you know that there are other tools that the government can deploy, including fiscal stimulus. No? So maganda nga, nagkaroon ng create law, no? Which lowered the income tax. So that's a stimulus. But if you compare what BSP has done and what the national government has done, parang lahat ng pagbubuhat ng economy nanggagaling sa Bangko Sentral eh, no? Kailangan tumulong si national government, no? Although again there are other issues there like the credit ratings, kasi pag tinignan mo Marvin yung spending ng national government, we will end the year ang growth ng spending is only 11%. And that's not any different from the 2019 spending growth.
Yep.
So parang how can that be crisis proportion type of spending? It has to be a little bit bigger than that. Unfortunately, revenues fall together with rising spending. Yung deficit nagwa-widen. And yun ang ayaw nila ma-mismanage. Which they are able to justify. Yeah.
As the deficit becomes bigger also, do you think it will come to a point that it will be a concern? Because today a lot of people are saying naman that okay, there's a deficit, but it's not at a point that it's too alarming to be a concern for the country as a whole.
Yeah, yun nga, parang yung argument ng mga supporting stronger stimulus, like for example, Congressman Stella Kimbo, who wanted a rise passed in Congress, unfortunately hindi na suportahan, is that ngayon mo kailangan gamitin yung good standing mo and very manageable deficit. No? Your debt ratio is at a historic low at the end of 2019, and compared to our peers in the ASEAN, its share to GDP is very low. It was below 30% at one point. Now probably closer to 40%. In 2021 probably close to 50%, but still very low historically kasi ang peak niyan, Marvin, was 70% back in 2006.
Wow.
So malayo pa tayo, and dami talagang space, no, to support the economy. But you know, you can't really blame the finance group, the Department of Budget and Management, kasi hindi rin ma-deploy ng efficiently, no? Hindi ma-absorb ng agencies fully yung funds, no? So why will you spend if they cannot absorb?
Given that we saw rates inflation go up to 3.5% in December, given that the economy is also continually steadily opening up, do you see this rising pa for at least the foreseeable months for 2021?
Pag bumaba na yung vegetables, Marvin, the 3.5 will probably slow down a bit towards mga 3, maybe even slightly lower than that, which is good, no? But as I mentioned earlier, you will have year-on-year comparisons for oil, no? And as we approach the peak months of the pandemic last year, yung year-on-year mo will have a substantial impact on the headline number. So by mga April, May, so April data, which will be coming out first week of May, we will see a pretty large increase in oil prices year-on-year. And we will not count out the possibility of inflation approaching 4%. Temporarily, no?
Oh.
But however temporary it is, Marvin, it doesn't seem prudent to be cutting rates during such time. Kasi baliktad yung direction ng policy sa inflation eh. Parang that's not seen to be prudent. So this is why BSP is committing to pause until about the end of the first half. Hindi naman mag-hike, but they will probably not cut rates until about July.
So with that premise also, no, there's a big chance that the RRR won't be touched also for the year, because that has a big impact also on how inflation will be.
Well, actually, that's a little bit different, Marvin, kasi you're talking about price there, diba, sa policy rate. When you talk about reserve requirement, it's the availability of liquidity in the system, and which is something we want to continue, because again, more and more people will need the funds, no? Especially the SMEs. No? So you don't deprive them with if there is a chance to increase the liquidity. But you won't necessarily have to cut rates kasi pag kinat mo yung rates, the price is so low, baka yung mga big corporates lang yung makakuha niyan. No? So what we want is more liquidity in the system. And yun na nga, because they cannot cut rates, baka what BSP will do is instead cut the reserve requirement. We're expecting two of them this year, one very soon, kasi nga malapit na mag-spike yung inflation, and then another one in the second half. So we will have another, hopefully, 2 percentage point reduction in the reserve requirement. And again, that liquidity is needed to continue supporting the economy.
Got it. Moving on to the US dollar.
Some people are saying napaka-optimistic naman ng BPI. They're looking at 7% growth for 2021. Mas malakas pa sa 2019 growth. But you have to remember, the assumption there is the decline for 2020 will be double digit or close to double digit. So by 2022 pa tayo makakabalik sa 2019.
Wow.
And that's not very encouraging in a sense because the US, China, Vietnam, some parts of Europe will already be able to return to 2019 output this year. Tayo, 2022 pa.